All right, guys, we're back to start chapter 20 PowerPoint, and this chapter is called Completing the Accounting Cycle for a Merchandising Business. This chapter is super short, so we should be able to get through this in less than 10 minutes. It is basically talking about closing entries and posting your closing entries to the journal accounts, the ledger accounts, and then preparing a post-closing trial balance. So that's kind of what we're going to talk about. It's very, very similar to Accounting 1 when we learned about the closing entries. We are now just completing the accounting cycle and doing closing entries for a merchandising business. If you remember in Accounting 1, we had 4 closing entries that we had to complete. For Accounting 3, we just have 3 closing entries that we have to complete. So let's go ahead and get started with your notes. And I've labeled your notes by slide, so hopefully it's easy for you to follow along. All right, the first slide is just an overview of the 3 closing entries that we must complete. The first one is close all temporary accounts with a credit balance to the income summary account. So, and I'm going to tell you on the next slides which specific accounts those temporary accounts with a credit balance are, but just know that the first thing you're going to do is close the temporary accounts that have a credit balance. The second closing entry that you're going to make is to close the temporary accounts with a debit balance, and those also get closed to the income summary account. And then the third closing entry that you need to make is to actually close out the income summary account, and that closes over to capital. All right, so let's go through these step by step. The first closing entry, or step 1 as it's known on this PowerPoint, is to close the temporary accounts with a credit balance, and these get closed to the income summary account. So the accounts to be closed are your revenue account, whatever revenue account you have for your problem. It could be some version of the word sales would be your revenue account, and then your purchase discounts and purchase returns and allowances. Those are your contra cost of merchandise accounts, so that's why those are also closed. Those 3 accounts are the ones that you're going to close. And the way that you close them is in step 2. You debit the revenue account and then you credit the income summary account, because the normal balance for a revenue account is a credit. So the balance in that account, whatever the number may be, is going to be a credit balance. So in order to close it or reduce it to 0, you have to debit it for that amount, and then the debits and credits cancel each other out, and you've then closed that account. Now, what do you do when you debit it? Well, you have to do something, right? Because if you debit one account, you have to credit another account in order for our accounting equation to stay in balance. Well, you take the amount that you debited and you credit it to the income summary account. And you're going to do that exact same thing for your purchase discounts accounts and your purchase returns and allowances account. Each of those accounts have a normal credit balance, so in order to close it out or zero it out, you must debit it and then credit another account. And the other account that you credit is income summary for each of those. If you want to see an example of what this looks like in journal form, if you turn your textbook to page 589, you will see this exact transaction journalized. Okay, slide number 4. The second step, we must now close all of our temporary accounts with a debit balance. So the accounts that we're going to close that have a debit balance, a normal debit balance that are temporary, are the ones that are listed there. So it's sales discounts, sales returns and allowances, purchases, transportation in, and then all of our expense accounts. So the way that you close, and I mean, some businesses have 10 to 20 expense accounts. So this could be a lot of accounts that you're going to close. The way that you do it is you debit income summary and then you credit all of the accounts that you're closing. So sales discounts, the normal balance for a sales discount account is a debit. So in order to close it and reduce it to 0, you would need to credit that account and then you debit income summary. Same with all of the other ones that are listed there. Let me touch on expenses just a little bit. For expenses, the normal balance for an expense account is a debit. So in order to close it or reduce it to 0, you would need to credit that account. And if you credit expenses, you also need to do something to another account in order to keep the accounting equation in balance, and the other account that you debit is income summary. If you'd like to see an example of how this works or what this looks like in journal form, if you turn to page 591 in your textbook, you'll be able to see what this looks like in journal form. All right, let's move on to the third and final closing entry. The third step is to close your income summary account to retained earnings. So in order to do that, you first have to figure out what the balance is in income summary. We've already made some entries into income summary by closing out the temporary accounts that we just did in the last 2 slides. So now that we've made entries into income summary, we need to find out what the balance is in our income summary account so we know what number to use when we close out that account. So in order to find the balance, you can either take the total, the debits minus the credits, or the credits minus the debits, I guess is what it would be, and get a number. That number is your net income, and that's the number that you want to use to close out your income summary account. You want to use the net income. So once you find out what your net income is, you're going to find that if it's a net income, it's going to be a credit balance in your income summary account. If it's a net loss, you will see it will be a debit balance in your income summary account. We're just going to assume that hopefully most of the businesses that we use in this class are functioning on a net income, and you don't need to really worry about that whole debit column. So we're just going to assume that we have a net income and the balance is whatever number is in the credit column of your income summary account. So in order to close out that account, you must then debit that account to reduce it to 0. Now, if you debit income summary, what do you need to do to the other account that you're using, which in this case the other account that we're using is called retained earnings? That account then would need to be credited for the amount of the net income. And if you'd like to see an example of how to close out an income summary account, that is also on page 591 in your textbook. All right, the final thing after you've made the 3 closing entries, the final thing that you need to do is complete a, first you need to post them. So from your general journal entries that you've made, you need to post those to the correct ledger accounts, which that posting process is no different than what we've done in Accounting 1 and Accounting 2. The only difference is in the description column, you use the words closing entry as your description, not the source document, because for these closing entries, there is no source document. So instead of doing that, you use closing entry as your description for that transaction. Once you've posted all of the transactions, all of your closing transactions, then you need to create something called a post-closing trial balance, and this is the same thing that we did in Accounting 1. You make a trial balance after your closing entries to make sure that your debits equal your credits. On the post-closing trial balance, you only list the accounts that have a balance. If they've been closed out, so those temporary accounts in income summary that do not have a balance, you do not put those on the post-closing trial balance. Only your permitted accounts that have a balance go on this trial balance. Then you add up your debit column, add up your credit column, and they should equal. All right, that's all I have for this chapter. Pretty simple. We'll work through some demo problems to kind of help you visualize these journal entries, and I also advise you to just check those pages in the textbook that I referred to on the different slides so you can actually physically see an example of what these closing entries look like. All right, guys, thanks so much.